Righto, money miners. Welcome to another bloody... Now, this is going to be an information spectacular, and we won't give it away too early, but Axis Mining Technology have made it possible. The trusted advisor for drill hole survey, instrumentation. And we have an absolute ripper of a bloke with us today. A famous last name, you'd say. But you're not related, are you?
Not that I'm aware of.
You're not related to the man in the book behind you. So
I don't think so. Unless I get some kind of dodgy email coming at some point saying,
Ancestry.com,
yeah, long lost son, kind of, yeah.
Mr. Johnny Sykes, welcome to Money and Mine, Cobber. How are you, mate?
Good, busy like everyone else, but yeah, good.
You're busy looking at your rap sheet, Jesus Christ, between UWA, Curtin, Minex, Greenfields Research, buddy. You're a man with some fingers in some pies, it appears.
Mainly lots of small pies.
You know a lot about things.
Mainly, I would say mainly mining and exploration, which is probably helpful for this podcast.
Oh, very good.
But yeah, strategy, management is also kind of, that kind of broad area sort of applied to, our part of the world, I guess.
Oh, very good. JD, what's on the menu today, mate?
Well, Matty, there's one more thing to add. Strictly Boardroom John is the co-author with Alan Trench, who we interviewed, must be over a year ago now, guys. So works at UWA, does teaching on the MBA course there, and the articles come out once a week. There's a book or two floating around here that you can check out as well. So,
mate, we got the last hard copy.
Oh, have a look at it.
It might be the last hard copy in a while.
Hey, Trav, we know that things with boots on the cover work well, like the thumbnail yesterday.
Fill your boots, mate.
There was a lot of debate about that cover, yeah.
Why is that?
Well, it's just, we took editorial control for a change, and sort of, rather than just being given the suggestion by the publisher, it's like, no, we need something,
bit different,
mining and metaphorical. Yeah, so it's the metaphor of leaving your boots and going into the boardroom kind of thing.
Love it.
I like it. And pretty interesting. It's always a good read, and I think what you and Alan do really, really well is kind of traverse the research world of exploration and mining and the investment side of things. It's kind of like a bit esoteric, and quite often the applied side doesn't really interact with it very well, or at least not in the mainstream. But both you and Alan are really, really good at kind of traversing it, communicating it, and bring it out in your writing, and bringing those kind of like those insights to the forefront through.
It's amazing how siloed a lot of this stuff is. Like everyone talks about silos at big mining companies and stuff like that, but yeah, they're kind of nothing compared to the silos between like academia, industry, even like the financing and sort of operations side of the industry and stuff. How in a weird way, people don't talk to each other anyway near as much as you kind of think they would. I think you've kind of learned this in
we don't
your
talk to
journey
anyone
as well.
Unless they're on the show.
It's a good way of getting to talk.
You're meant to say we're breaking down the silos, Trav.
But yeah,
that's
you know
the
what I mean.
pitch.
Or they've got word on the decline.
It's amazing how I think you've mentioned it in some of your things, like how this didn't exist as a kind of idea before, right? Is how can you have such a big industry with kind of so little commentary on the internet kind of thing,
Totally. Yeah. Well, there's plenty of commentary. It's just, can you believe the commentary?
Paid
good commentary, should we say?
Yeah. And not as detailed.
Yeah.
So I think the way I want to go about this sort of chat today is centered around a lot of the various topics and topics that you've studied, written papers on, taught about in the recent past. And a few of those will be commodities themselves. Others will be sort of ideas about exploration. But I thought, why not start with tin? Because you did a presentation, a 40-slide presentation not too long ago on tin, sort of centered around the future of the supply, the challenges on the supply side, and essentially how we're going to meet the expected demand in the future. So I think we should just start by kind of laying out the production side of things. We've seen waves of China, peaking in 2007, Indonesia peaking, Myanmar coming out of anywhere. How did you sort of cotton on to tin as an idea to do a presentation about, and what kind of excites you in a way about the future of tin?
Oh, as with a lot of these things, it's a bit of a backstory. So I'm
You're from Cornwall.
Yeah. What, sorry?
Are you from Cornwall?
No, I'm from Yorkshire.
Oh, gosh.
But yeah,
I was going to start whistling.
Yeah, no, I'm not.
You can't whistle underground for the Cornish knockers.
Yeah, I'm not quite that marginalised community. But yeah, I know I've been down to the where I have been is Royal School of Mines, and Camborne School of Mines is in Cornwall, which is like the rival college.
Yeah.
So there's a big the college's sports match between them, rugby match each year, which is the bottle match. So we used to go down to Cornwall quite a lot, and their older campuses used to be around South Crofty and that kind of area. So I'm aware of those places, shall we say, even if I haven't sort of worked there. But yeah, so the tin thing for me, it would be a bit of a sort of back to the future thing. So the first time I was doing tin work was way back, like sort of 2010, 11, 12 kind of period. And there is a sort of eerie similarity now than there was then. And it's part of it, this time it's different kind of thing. Is it different this time is kind of the thing that's sitting in my head. So, 10, 12, 13 years ago, you had this situation where, tin it's used as electronic solder. It's sort of taken over from lead for sort of environmental and poisoning type reasons.
Oh, so lead was the solder before tin.
Yeah.
Ah, there you go.
You guys know this, right? It melts at a low melting point, so it's easy to use as a solder. Tin's kind of the same. It's not the perfect solder. It has some sort of it doesn't melt quite as easily, and it can sort of not be quite as robust long term. So there was like technical challenges to the sort of chemistry of tin solders that had to be sorted out. But that's, I believe, reasonably sorted out now. So that was it. Sort of then it was being pitched as this high tech metal, right? Back in the days here where Facebook has only just taken off and all this kind of, so like high tech metal, and then you have basically all this supply coming from those parts of Asia you were talking about. So. It sort of drifts down the peninsula there. So you've got Thailand used to be a big producer. Malaysia used to be a big producer. Indonesia was then and is now the massive producer. And it's all the same sort of mountain belt. And it sort of the tin comes out of the granites, goes onto the beaches. You get these beach sand deposits so it's alluvial tin mining, kind of a bit like the mineral sand mining, the Alucra or whatever does. So that was kind of the dominant thing in the industry, but there's various sort of, environmental challenges associated with that. It's a lot of moving a lot of dirt in a lot of nice places, causes a lot of mess, basically. Obviously places like Thailand, like Phuket is, you're better off building a hotel than a mine, right? You make more money with a hotel.
Yep.
Although that is a great trip. If you go, Thai Sarko, the smelter, is in the middle of Phuket. So
really,
that turns Phuket into legit business expenses.
Yeah, right.
So that maybe that could be
money of mine. Site visit. Go suss it out.
Yeah, yeah. And you know what?
Don't continue this conversation.
You cannot book a business hotel around there.
Bad.
You've got to book resorts. So yeah. That used to be the tin bit of the world. Kuala Lumpur is built on tin mining. There's still mines in the suburbs and stuff.
Wow.
So that was where everyone was sort of seeing, this is long-term decline. Where's the new tin supply going to come from? And then you had all these companies from Australia, Canada, etc., with the sort of back to hard rock kind of idea. Yeah. And the UK, we were talking about Cornwall and places like that, the Iberian Peninsula, so Spain and Portugal and stuff. And it's like, is this the future? We're going to have this like structural change, sort of from Asia back to sort of Europe and Australia and America. And we were sort of analysing this at the time, and it's like you've got the other place where there's a lot of tin mining, South America and Africa. So we've got South America, Africa, Asia. We've got limited information. It's difficult getting information out of these places. You're trying to do forecasts, and like 80% of the supply is from areas where you can't get good data. That's a really difficult way of forecasting. And so we're like, our feeling is maybe you will get this switch, or maybe some more supply will come out of Asia or South America or Africa, but we just can't really say where. And then, sure enough, then this wasn't predicted. It was just like kind of subtly kind of expected, but you couldn't really sort of nail what it was. You had this discovery in Myanmar, which, as far as I understand it, it's basically on the border with China and with the tin mining provinces in China and the smelting provinces in China. And it's in one of these parts of Myanmar where like all the border regions are like separatist like regions where there's a civil war going on, but a different sort of different, like tribe or clan or whatever it is, grouping trying to separate. So these are, barely owned parts of the world in the jungle mountains and whatever. And as far as I understand it, a load of Chinese companies came in, sort of mined it all, and took it down the road to their smelters. So you just suddenly became the third biggest producer in the world in like a year. So like a proper, we called it a black swan. Yeah, everything's a black swan. I think this was a legit black swan. And so that then fulfilled the supply side of things. So you didn't need any of this new supply. And then you come on to where we are now, and the story's slightly changed. Tin's still used a lot in electronics, but now we've got also like a green energy transition link going in. So that, that's the demand side stuff that's got people excited. And it's exactly the same supply side story, right? Which is that, how long will these sort of alluvial and artisanal supplies from Southeast Asia and Myanmar last? What is going on with the sort of conflict mineral stuff in Central Africa? So I've done a lot of work with the International Tin Association, not on this specifically, but they help run the, these sort of supply chain transparency things where it's all like tagged up at the mine and through all the different smelters, so that you can sort of say that it's not come from one of these sort of militia controlled mines and stuff like that. Yeah. So in theory, that at first the kind of conflict minerals thing stopped lots of production because, like, if you're Apple or whatever, you don't want to be associated with conflict minerals, right? That's not how you sell iPads. So it kind of caused all that supply to go away as everyone got too scared. But as the schemes have come back in, it's sort of slowly building back up kind of thing. So, you've got this kind of same kind of story, all our guys in Australia, a few in Canada, loads in Europe again. And is it going to be this switch, or is something going to come out of somewhere again? And that's kind of where I've got to. It's like, it feels a little bit different this time. I think I know everybody's tired of ESG and stuff like that now, but I do think that the ESG and critical minerals, strategic minerals thing may be a little bit of a differentiator this time around. I mean, don't get me wrong, people cared about the environment sort of 10, 15 years ago as well, right? But there's sort of specific funds being directed and, from the financial side and from governments sort of being a little bit more thoughtful on these things. And also
some governance. As a travesty, the Australian government doesn't classify tin as a critical mineral. Get your shit together. But yeah.
Yeah, I mean,
and fucking hates uranium too. Don't get me started.
The whole thing of, it's right. So as someone who's worked in critical minerals and both kind of like the academic writing the papers kind of side of thing and sort of with people trying to take them out of the ground and whatever, I mean, everything's a critical mineral now, right? Pretty much, other than tin and uranium.
For gold.
Yeah, I mean, but we're sort of we're running out of the periodic table a bit, right? And so I think a lot of these things aren't, if I would be honest, in some ways they aren't critical. But I think in a weird way, what the important thing of this is, it's actually got people to pay attention to it, right? Even in a country like Australia, which I can't remember what the exact % of our export revenue or whatever is mining and minerals and stuff.
Yeah.
People generally don't care. You know what I mean? There's, at a government level, at least it's got people to sort of think, these things come from somewhere and are used for something. And whilst, in the grand scheme of the world, it's not the most important thing, it does feed into important things that we all like cars and electronics, and hospitals and things. I think it's been good in that sense, and I do think that might be a little bit of a differentiator. These, there's slightly more nuance around the funding and slight more nuance around the government. Might just take a few of these projects that they're kind of on the margins. They didn't make it last time round, but maybe with that they might get a go this time round.
I guess having been someone kind of in the weeds in trying to forecast things like supply and demand, like how much faith do you actually have in our ability to forecast?
Us three, or
a lot.
Oh, good.
Well, it depends what your approach is. I mean, the best way to be right is just make so many forecasts that eventually one of them will be right.
You showed it. You showed a great chart. I can't remember what the medal was, but there's like all these dotted lines. There's the sort of bull, the base, the bear, all the other lines. They're all wrong. And then this is a hindsight study, and you can see, bang. Every single one of them was wrong, and there was like 6 forecasts going.
Yeah, and there is truth in that. So when I worked in sort of copper price forecasting, It was unfortunately the GFC, right? It happened in the middle of a couple of years doing that work. And I have gone back and looked at our forecasts. And actually, prior to the GFC, if you look 2 years out, they're broadly accurate, right? And that the copper price came back to that level. But what it misses is like that massive big dip down and actually a massive ramp up. So it's right.
Long term, but
totally useless. It has all of the bits that you need to know about in the middle. So I think, and in fairness, something like copper's a bit better for forecasting. So the proper sort of econometric forecasting works well when you've got good information, and you can actually, the market's fairly competitive, so you can put together your little algorithm and you can sort of make some general stuff going forward. You can combine it with consensus and get consensus forecasts. Consensus forecasts are generally more accurate than any one individual forecast kind of thing. So that's kind of okay. But all of these things are just like information that you put in your head to help you make decisions. They are not, in my opinion, the sort of the truth of the future kind of thing. And then when you get into areas, tin, rare earths, lithium, these kind of things where either there's just not the data, like it literally doesn't exist, or it's just, how do you create a new lithium market, that's sort of 10 times the size of this market with X numbers of producers and sort of strategic influences on the market? Like, you can't make a sort of forecast that say, oh yeah, it's going to be this price in 3 years, right? Everyone has an opinion, but in that sense, it's more just everyone trying to express their opinions on where they think things are going.
You're so much more prone to error when you come from a small base.
Just the sources of error are enormous. It could, it could literally be anything to a certain extent. So I think in that area, I would say the value of the forecasting, there's a quote, I think it's like Eisenhower or someone, which is plans are useless, but planning is everything. And I actually think it's in these cases, it's kind of the forecast is kind of irrelevant. It's the stuff that the effort people put into doing it, looking into the supply, looking into the demand, talking about it on a show, right? And trying to work out exactly what this stuff is used for, by who, how's the value chain fit together? Where's the value in the value chain, right? Is it the smelters that make the money, or the miners, or the traders, or whatever? Where are people exploring, not exploring? All this is the stuff that's the useful stuff. And in fact, knowing the price, so to speak, in the future is not as useful as actually trying to identify an asset that you think is a good one to invest in, or a new exploration play, or how you can leverage your fantastic new piece of technology into processing or whatever. Actually, the forecasts are relevant then. What it was the knowledge that was useful.
Yeah, the only true way I think to protect against incorrect price forecasts, as you said, Sykesy, is probably a CRE incorrect price forecast insurance policy. That is another
is that a new product?
Out there offering that they have.
Wow.
No joke. It's like a hybrid policy.
I think you're spot on, mate. You're an MD of a mining company. You're that worried. Where's the commodity price going to go? What's happening? You've got so many things just to stress about.
Yeah.
Take some of your stress away. Just call up CRE Insurance.
Well,
I thought that was hedging.
No.
CRE does hedging now.
Oh, mate, I put a call out to any mining company that has gone to CRE Insurance and asked for an insurance policy, and they said they couldn't do it. And I bet you I will get no responses. Absolutely none, because they will tailor anything.
Tailor is the key word, mate. Risk is bespoke to every different mining operation, and these guys are the pros of a bespoke offering.
Risk is actually not a word they use, because once you got insurance, there's essentially no risk.
They call it coverage.
Coverage. Just
because you're covered.
I've never seen a company like this. Like no is just
not in the vocabulary.
Not in the vocabulary at all, GC. That is correct. So that's a good idea.
Well, one of the things you pointed out in the paper in the weeds there was the amount of geological studies coming out of China specific to tin, far exceeding any other country. What's the sort of takeaways you had from coming across this?
It's just trying to, my sort of whole learning from sort of working in this sector is we have lots of information, but the answer is always where the information isn't. So the first thing I sort of try and do is identify where the information is, and then look, where isn't there information, and what can I find out about that? So it sounds really obvious in the mining sector, but people still overlook it, right? If you are doing any form of answer about the mining industry and you don't involve the word China multiple times, because it's the world's largest consumer and about a quarter of the mining industry, I think, globally, you're probably missing something, right? So, your answer should be China, 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 something else. So it was just trying to get a bit of an effort. It's like, okay, China's a huge tin miner. It's a huge tin consumer. What does China know about tin kind of thing? And you've seen the same thing for like lithium and rare earths and stuff. China produces a hell of a lot of scientists, engineers, huge amounts of, research. I don't know the numbers of the exact number of sort of mining engineers and mineral processing engineers and stuff that they produce, but it's orders of magnitude more than we produce in sort of the West. So what are they all doing, right? They've got to be doing something. And, a good chunk of them are researching the tin industry. And if you go to journals like or Geology Views, a really good geology journal, every edition there are hundreds of papers on Chinese mineral deposits, right? Because there's lots of Chinese academic geologists going out there and, sampling these deposits and all this kind of stuff, right? And then we wonder why they have the expertise in it, right? It sounds really obvious, but it's like, it's the same. You hear the same thing about rare earths and lithium, right? It's, how they got all this knowledge, or they researched it. It's kind of the answer. And then as these things kind of almost get like relearned kind of by the West, people start looking at these things again, producing papers, 15 years ago, there was nobody ever wrote anything about rare earths, whereas there's actually pretty good rare earth expertise in Perth now. But that just involved some people having to actually look into it, right? It's just really stupid, and produce papers and write reports and try and do pilot plants and all of this kind of stuff. So it does come. But it was just that. I think there just seems to be that China puts a lot of effort into its tin industry. So to me, that sort of says it's probably going to be fine, right? If they know where to mine and they know how to mine it, one assumes that it will continue being important. So you're not going to. It doesn't seem like it's going to drop off a cliff or something like that.
There's such signal sometimes in like sometimes China or the Chinese entities will make acquisitions in periods of the mining cycle that just seem so kind of counterintuitive. Like famously was Greenbushes itself, right?
Greenbushes. Another one was 10K in the DRC that CMOC bought.
And they kind of seem like, fortuitous in hindsight, but I think it's got a lot to do with what you talk about, which is the incredible kind of focus, long-term outlook, and internal capability.
I think so a little bit. I think the other thing we kind of got to remember with this kind of stuff is, and it's not like Western financial capital has made 100% smart decisions in most of these arenas, right? I was looking at a presentation a few years ago, which one of the accountancy firms had produced, which showed that basically all of the value of the M&A done by the mining industry in kind of that boom between sort of 2006 and 12 was basically destroyed in the bust that led up to 2018, right? So arguably every investment was a bad idea. Like obviously that's sort of an average thing, but it's not like we're covered in glory either, right? So I think there is something. I think there are some specific things to do with China as well. There's a lot more controls and capital and things like that, and so sometimes like routes of getting money out of the country are kind of quite important. Diversification is really important. Like if you are starting to earn a lot of money in China and you want to secure the future of your family and generations to come and your business and stuff, you might not want to have all of your assets in the country, right? So
there's a funny saying that's like the fastest way to die in China is to become a billionaire.
Yeah, it's we complain about the regulatory environment in Australia, right? But it could be worse. Right?
Yeah.
So there's stuff like that. There's also a learning curve on these things as well. I've looked at Vale in the past as a bit of a case study on this, but this idea that, okay, just because a Chinese company or a Brazilian company is not Canadian, Australian, British, American colonizing type company, that doesn't mean that they're necessarily going to get the social license stuff right and the political stuff right. They just find a whole new way to screw it up, right? So there's a bit on that side of things as well. And then I think you're also right. There are probably people who are being a bit more strategic or think they are and sort of looking at things in the long term. But then again, so plenty of, private equity or whatever, that's their pitch, right? Like we look at things over a longer range and we try to be a bit clever and nuanced and smart and all this kind of stuff. Well, that's probably what they're thinking too, right? So yeah, I think I think the trap in this is is to think of China as China. It's like 1.4 billion people and the world's largest economy. There's lots of stuff going on, and everyone is competing with everyone else, and everything is it's massively complex, right? So why are they doing
use
it?
simple models in my head. So
Yeah. Well, no.
Well,
This
they're
is
the
the
most
thing, right?
advanced, like in so many things, because it all got flogged off to them.
Well, yeah. So I remember, I can't remember which book I was reading about. It was like when you had the Soviet Union collapse, like there was just all these Chinese companies in like Kazakhstan and all these countries, and they're literally just sort of going in there and just like packing up kind of mining plants and factories and stuff and just taking it over the border, and it's like, if it's there, it's cheapest, buy nothing is kind of, the cheapest way of getting hold of something, right? So,
They're resourceful.
yeah.
So sort of going on that same tangent, but changing commodities to rare earths, you've done a bit of work on as well. And it's such a fascinating, it's probably more extreme than almost any other sort of commodity or group of commodities that we talk about in terms of a country's influence. The CCP essentially allowed some of the operators to run at a loss for periods longer than any Western company could compete. And now you have the output being the vast majority of rare earth processing, a lot of the mining and everything. The technical know-how, the IP is all Chinese-based, kind of like, to an extent, tin as well. So what did you kind of learn diving into rare earths about this kind of supporting commodity markets through not really a communist, but a government sort of supported lens?
Yeah, I think, again, it's kind of an interesting thing, right? Because China itself is just full of these contradictions, and rare earths are kind of a classic example of this, which is that, there's sort of, and if you can imagine it, like how this would work in, say, like a big mining company or something is, right? There's what people say we should do at the top, and then there's what actually is happening at the bottom, and they're not always aligned, shall we say.
Yeah.
Same thing in, like different regions, right? They have their people in charge, and the regional view may be different to I suppose we'd call the federal view, which might be different to the local view.
And the municipalities are competing with each
they're
other.
all competing with each other. They've all got to beat, various GDP statistics and stuff like this, right? So again, it becomes really, really complicated and messy. So one of the lessons was kind of like not to sort of assume that it's like some kind of like big organized grand plan. Like, don't get me wrong, as far as I understand it, the Chinese Communist Party has huge influence in China, but it's not sort of, it's not quite as in control as is sort of, it can prod and direct quite hard, but it can't, it's a big country with a lot of people, right? And some of these places are a long way from Beijing. So they're doing their thing as well. And this is, it's a little bit the story around kind of like the environmental damage and dodgy labor practices and stuff like that. That was a really interesting example of where like the sort of, the head, so to speak, was really unhappy with what was going on at the feet, if you know what I mean. It was like, no, actually, this is bad, right? We don't, people, the last thing the Chinese Communist Party wants is people complaining and protesting about environmental damage and stuff like that, right? That is not how they stay in power. So, it's like, okay, let's clamp down on all this and sort of consolidate them into state companies, which we can then control and all this. So that whole complexity, I think, was sort of, that China is this weird thing doing all sorts of different things, was, I think, often missed from the story, and to me was kind of insightful. It then helps you understand like the approach to the rest of the world. It's much less Machiavellian than I think is often made out, and much more kind of the result of lots of people trying to do what they think is in their own interest. So it's not. I think sometimes it's not as sort of like as evil and scary as it's made out. I think it's a little bit more accidental than that. I think that's sort of sometimes worth bearing in mind. But yeah, I think more from the industry dynamics. Yeah, clearly China is the dominant, and I think lithium has followed after this. It was for the sort of the Western suppliers, it was the learning curve that a lot of these commodities are what we call concave. The value isn't in sort of discovering them; it's in kind of successfully building some kind of processing plant.
Yeah.
And that's not how we do things.
No.
So there was
rocks.
Oh,
Exactly.
we try, but fail.
But yeah,
Terribly.
In fairness, the thing that we make the most money of in the mining sector is iron ore, which we barely process, right?
No.
So,
But rare earths is so unique in terms.
totally the opposite of it, right?
Yeah. But there, it's so unique in the terms of over half of it is mined in China, and everything is processed in China.
Yeah.
It is just. It is. China is like Latin for rare earths, pretty much.
And it took us a while to learn that downstream stuff's important, right? It's not only is it that you can't sell into these things, partly for strategic reasons, and that they've also got their own suppliers and stuff like that, but also because these are complex processing plants. It's not just like chuck any old ore or concentrate or whatever in there. It's like it's a chemical thing that has to go in with exact parameters. It took us quite a while to sort of go through and learn all this, and we've now got Mount Well going, and they've got their operations going in Malaysia and now here and in the US or whatever is all these plants. So we've captured a little bit of that learning. Mountain Pass has sort of gone in and out of production, right? But again, has that learning. So and they've gone down the value chain and sort of have now found how much of the value chain you need to sort of make money, so to speak. It isn't in the mining; it's in that somewhere in the middle kind of space.
But they've still got to send most of it to China, yeah.
But
except the DBT, the heavy rare earths, they're going to be processing themselves, aren't they? Mount Well, in Malaysia.
They'll be doing a bit in Malaysia. They're building the thing out in Texas.
But I think this is where we have to sort of get a little bit realistic. Is that you're always going to be sending something to someone at some point, right? Australia is a perfect example of this, right? It's 25 million people or whatever, right? $2 trillion economy or something. We can't buy everything, right? We're here to sort of sell the minerals in the ground, right? If we had to consume, if we only mined like the steel that we consumed, if you know what I mean, it'd be like one tiny junior operator in Geraldton or something, and that'd be it, right? And Perth would have nothing, right? So we've got to sell it. You're going to sell it to someone at some point. So I don't think that's necessarily a bad thing. I think sometimes there is a sort of cautionary type thing. I think from a government point of view, what you're wanting is you want several of everything in these, whatever these supply chains are. So, if Korea's doing a bit, Japan's doing a bit, China's doing a bit, whoever else is, maybe something in America, maybe something in Europe, that's probably fine, right? And then, the global economy can get on with doing whatever it needs to do with the rare earths, right? Making electric vehicles and stuff.
Yeah, I mean, then you're sort of protected from, might accidentally park your boat next to an island and China cuts you off like Japan. No more rare earths for years. So it's good if your supply and your inputs are all distributed.
And I think that's kind of important, right? So that's the is it the Senkaku Islands, I think? And this is what kind of kicked everything off in 2010 was that, and I can't remember the exact, so it's in the papers somewhere, but someone's fishing boat went near someone's island and someone's captain got captured and shit be happening kind of stuff. I can't remember something, it was between China and Japan, and then the logical conclusion of all this was that rare earth quotas got reduced. That wasn't actually what happened because that's not a logical kind of thing. But somewhere in amongst all this nonsense, rare earth quotas got reduced.
I did an assignment on that.
Did you?
Yeah.
That's why Linus exists in the way it does.
Yeah, I remember. It was in like 2012 or something, the Battle of Sendaku or whatever. Whatever it is.
They had two names as well, which is like the Japanese name and the Chinese name, which is never a good start, right? So to me, that's why rare earths in that sense were critical, is that they're vulnerable to shit like that, right? Is that what makes a metal critical? It's more of a short-term thing, and it's if something like fishing boats falling out over an island occurs, and it relates to, say, copper, and a result is some country bringing some quotas or a mine gets closed, the market can absorb this. It just, gets on with it. You might get a bump in the LME price one day and lots of people writing some stories. Whereas if it happens in rare earths, because they only come from a limited place, everything melts down and you get these ridiculous prices and stuff like that. That's because it is critical. All right, so then the way you solve that is kind of slowly what we're doing, right? We've got some supply from the US, some supply from Australia, bits from other around the world. I mean, if China put in big export quotas, it would still be a problem, but it would be less than a problem than it was 10 years ago. So we're sort of slowly building our way out of it kind of thing.
And that kind of takes us back to critical minerals, and the sort of rationale behind it is you have this list of minerals that aren't just, critical for where humanity needs to be or whatever. It's what does your country have and what does it need? And I think that's why tin's not on the Aussie list, because we have Renison. So that's kind of how we get there. But, you know, on that sort of tangent, you wrote the paper on critical, you know, is lithium a critical mineral or not? What were the sort of takeaways from writing that and diving into lithium as a sector?
So this was a paper that I did with a researcher at St Andrews in the UK, in Scotland, and one at then Las Vegas University in Nevada. So we all know each other. We've all worked in Australia. We're actually all British. But the idea was to sort of, we're all interested in this space, but like each of these different parts of the world has like different perspectives on, you know, like how is the US and the UK and Europe and Australia seeing this thing differently? So it was a little bit of a sort of, and it was all done via email and stuff, which is why it reads a bit odd sometimes, because we've literally had to sort of write different bits ourselves and send it via email and things like that. But it was really just get all of us work in this critical mineral space. And I think sometimes we get a little bit sick of like everything being a critical mineral and kind of a little bit of lack of rigor around sort of what is it we're actually talking about here? Because until we work out what it is we're talking about, the solutions that we have, we don't know what they will be, right? And a lot of people come into these things with like preconceived. So a lot of sort of academic and government people come at this from like a reduce, reuse, recycle type angle. And don't get me wrong, like recycling is good. That's not the problem. But it doesn't work in commodities where we haven't mined much before because there isn't much to recycle. So, you know, that's like one kind of perspective we have on it. So, all the lithium we've ever mined in the world is nothing compared to what we plan to sort of use in the next 5 years, right? So, and it's all in like weird things like ceramics and glasses. So you ain't getting that lithium back. It's like on your grandma's cupboard or whatever, right? You know, that's not going into a battery anytime soon.
Or the medication.
Yeah, exactly. Let's not go into where that goes. But yeah, no, you're totally right? You're not getting, you know, when it comes to recycling, some things you can recycle and some things are kind of gone. And even if they go to landfill, kind of landfill mining, I mean, in principle, kind of interesting idea, but you know, we have enough environmental problems mining normal ground, right? So,
Mate, I'm not putting my hand up to mining?
Yeah, you know.
Well, how do you look at lithium with like recycling in terms of like steel, for instance? Once you build a fucking building, it just stays there forever, essentially. Even though, whereas lithium's got a life. Like a lithium battery's got a life.
You're right. Although, again, so steel we recycle quite a lot of, because although it takes 30 years for us to bring the building back down again.
It's been going for so long.
Yeah, when it comes back down, and it's really silly, basically there's a big pile of like cement and concrete and a big pile of steel and a bit of copper usually, right? That's kind of the end point. So actually you can pull those bits out quite easily. So that's recycled at the commodity level quite well. What I think might happen more with lithium is the commodity that's recycled the most, I think, is lead. You know, the environmentally friendly metal, right? Yeah.
You know, when I was a kid, there was leaded petrol available when I was really young. You could buy it was leaded and unleaded. It was still around.
Is it not still available?
That explains so much.
Why I'm so much older than you.
I can more than easily remember leaded petrol. How young are you guys?
That's why I went on the hair loss medication, Trav. Maybe you should get onto that too. Anyway, continue.
No, I was just saying. So the reason it's recycled so well is because it's recycled through car batteries.
Yeah.
Right. So our car battery goes flat, usually on the highway or whatever. And then you take it in, gets replaced, they just drop one in, and then they take the old one, send it back to the car battery manufacturer, they strip it down, and dependent on what they're doing with it, it's either more directly just put straight back into another battery, or they just send the lead off to a recycling lead smelter, which sort of buys the value of the lead and sells it back in. But because it melts really, really easy, so it's easy to do. But B, you've got this like captured sort of circle, circular economy. It is actually a circular economy. It's recycled quite well. So for me, maybe that's what you're looking at doing, things like lithium, or how much lithium there is in a lithium battery is this whole other debate, I appreciate. But it seems to me that, and because they're so expensive compared to the car as well, some kind of, circle of recycling the lithium batteries kind of thing would be the way to resolve that. And that would fit with all people's, circular economy ambitions and taking control of your products and stuff like that.
How recyclable is the lithium in batteries? Because when it degrades, or what is it, the dendrites build up? Do they build up on the cathode or the anode?
Yeah, so this is where I'm being a bit cautious. I don't know, to be honest. I'm not a lithium chemist. I don't even know what speciality you'd need to know to do that. But is it also the question I would ask is it the most valuable component of that battery? If you know what I mean. So, the common thing about a mobile phone or whatever having 50 or 60 elements in it. When you do electronics recycling, they pretty much only recover the gold and occasionally the silver, because most of the value of all of those things is the gold and the silver. So I don't know. You'd have to do some kind of maths of the nickel and the cobalt and the lithium and the whatever else is in there versus the price versus the cost of recovering it, and what would you actually recover it for, in the same way you do for a mine, right? A polymetallic mine. But that to me seems to be more where you would head with the sort of recycling kind of thing, some kind of product level thing. And the point is, it's in the future, if you know what I mean. We've got to put them into cars first, and then we've got to work out how to circle it round. So it's a future looking project. It's not a sort of, we go back so if you want to find copper, you can actually strip it out of places. Housing booms are really effective ways of collecting copper, because everybody, on the block or whatever, right? They go in. Probably never had copper piping in Australia anyway, but certainly in the UK, you go into these houses, they renovate, and first thing anyone does is rip out all the old copper piping and replace it with plastic and selling that copper. And so you get a housing boom, and you get a sort of a copper recycling supply boom with it.
Well, technically a mining downturn is a copper supply boom, because they can strip out all the electrical cable from it. There is that much copper in an underground mine with the electrical cable.
It wouldn't surprise me, yeah.
Phenomenal. It's worth shitloads.
I don't know if it's occurred in Australia, don't have so many trains, but certainly in the UK, when the copper prices get high, the stealing of the train cable, the electric cables,
that does happen,
is an actual problem. I mean,
I
have no idea.
In South Africa last month.
Yeah, it must be the most dangerous way of making a living. But anyway,
totally. Yeah,
that's the jurisdiction.
So one of the aspects of lithium you kind of looked into was the potential of clay and clay extraction. We haven't really got to that point, although we shouldn't be too far away from it.
Like Thacker Pass.
Exactly.
Stuff. Yeah.
So I'm not sure how deep you dived into that specifically, but did you have opinions on the viability, the success, the proportion of future supply that comes from clay?
So I think more the angle we were trying to go with that, and I think I've seen people on this podcast before talk about this, is that if the lithium market that we want is going to have to be a very big market, if we're going to use it to supply this whole energy transition batteries kind of thing, right? If that's the model of our economy in the future, we need a lot of lithium, which means a really big lithium market, at least an order of magnitude in volume larger than the current one, but probably a lot more. So I think in that case, it is actually valid to look at the alternative types of supply, because, in most other mineral and oil commodities, there are different types of, getting hold of that commodity. Oil being kind of a really good example in a weird way, in that we tend to think of it as a really simple commodity, right? But you can extract it onshore, you can extract it offshore and deep offshore, and you can mine it in tar sands, you can frack it out of tight deposits and stuff, right? So there's actually quite a lot, even though it's a really simple thing, there's quite a lot contributing to that supply. So I think it's kind of valid to look at the clay, even some of these lithium brine type things and stuff like that. And then you have when I say the brines, I mean the geothermal brines and the oil brines, as well as then you have the brine deposits, which actually are extracted in the Andes. And actually, I think it's worth looking at them all and saying, look, actually, if we do want this huge market in the future, it's probably not going to be just the existing types of supply. We're probably going to need some innovation on the supply side to bring some of these new types of deposits on stream. That's not me saying that clay deposits and Thacker Pass are definitely going to be a thing. I don't know enough about it. What I'm trying to say is that I don't think you should rule out some of these things, and I think they are a valid thing to look at. Certainly if someone, I sit more in the exploration and also sort of innovation and longer term side of the mining industry, I think these are valid things to look at.
Yeah, such a big barrier to overcome with these, I guess, the potential new lithium deposits is, well, I think because you know how well Pilbara Minerals' operation's been set up by Silverstone, so like that mine's going to hum forever.
You know how he sort of
That's
said,
who you're up against.
He said WA has actually done a good job bringing a few mines online in the last 10 years. And in my head, I'm just thinking, thanks Silverstone for that.
Yeah.
We wouldn't be here without them.
No. Just the competition-wise, like it's such a big barrier to entry now, knowing that because coupled with probably the water stuff, the people, the surveying, like everything else Silverstone provides, that's a big thing to overcome. So pretty much the only way to overcome that, if you are looking to get in the mix with lithium, would be getting Silverstone.
Yeah.
Do what's worked. It's worked for Pilbara Minerals. They're still operating in a pretty shitty lithium price environment. So the only way you're going to withstand any decline in lithium is Silverstone getting it set up. Just get it set up and it'll flow, JD, won't it?
If you want half a chance of success, just call Silverstone.
Yes.
Be like Pilbara.
Just be like Pilbara. Anyway, my next question, Sykesy. But do you think then with like spodumene, for instance, and even brines, if they're going to bring in different methods, or seems like there's so much scalability in spodumene just because it's so abundant all across the world, would it be easier to maybe scale that with existing knowledge?
Well, I suspect both would occur, if you know what I mean. In sort of the race to do anything, whether it's sort of mining or, I don't know, the latest iPad or mobile phone or whatever, right? There's a bunch of different groups with a bunch of different ideas. And actually the winners in the end is usually a bunch of different winners as well. So the story is never quite as clear as what it is. So I clearly, the hard rock spodumene guys and the Salar guys in the Andes, they're the incumbents. They've got the best chance for sort of incremental improvement. And I think the hard rock guys are slowly going down that journey of going downstream as well, which we've seen with rare earths, which is kind of a requirement that they end up giving away quite a lot of value just with selling the spodumene. It's a great way to give
away a lot of value operating them too.
Well, yeah, I mean, look, I don't want this to come across as critical because I actually think it's a really great success story is that, sort of 10 years ago, there was like one vaguely operating sort of lithium mine in WA. And then like now we have, is it like 5 or 6 or something? And, people are always complaining that we never build mines and, we're no good at doing anything. Actually, people cracked on and got it done, right? So I think it's a success story. But, the next phase of the story is, well, we're probably going to have to build all these big separation plants down at Kwinana and wherever. And that's the next step and so on. So that is kind of a different model, right? That it's sort of gone from a sort of a DSO model to this almost like this chemistry plant type thing. And, it's taken a lot of research and effort and, I guess from a shareholder point of view, some would say, a lot of money has possibly been wasted in that. But also, I'm not fully sure how else you kind of do a lot of these things. They're big, expensive plants. So
it's interesting as the market matures, we'll see what it ends up being in 5 or 10 years time. But a few years ago, everyone wanted to be vertically integrated. Like you say, they were giving away far too much of the value. And some had committed, some had, verbally committed, but not quite put the money in. And then the market changes that quickly and they're trying to backtrack on their word or cut back on expansions and these sorts of things. And then who knows if it takes off in the future again. And all the value is given away to refiners in China.
MinRes got out at a good time.
They did.
Out of Kemerton and got back another 10% of Wodgina.
Yeah.
So that was a good play.
We'll see down the track what is the optimum scale of integration.
No, I think that's fair, and it will probably change over time as well, right? As each of these exists as its own, like each part of the value chain is its own little like mini supply demand market kind of thing, and so there's the overall kind of supply demand kind of thing, but the individual bits of the supply chain market may sometimes differ to the overall story, and then it goes up or down and things like that. So yeah, there is nuance to all of that to sort of work out, and the ideas will change over time. And yeah, I think I think we're looking back on this. I think I'm relatively positive about what sort of Australia has, particularly WA, has done over the last sort of 10, 15 years since I've been here in tackling some of these markets like rare earths and lithium and things, right? I can't say we've always got it right, but we've managed to bring on mines in quite complex and difficult commodities. So, and, start building all the politicians talk about diversifying the economy and stuff, and sometimes I appreciate they mean beyond mining as well. But I think there's a little bit of credit to be taken from that. These are not easy things to understand.
One of the sort of aspects of that, what you say on the mining front and the government sort of comments there as it relates to rare earths, is a phenomenal amount of government incentives and investment, and perhaps it's more of an ideological question in a sense, but the government has certainly seen its sort of mandate to an extent to pour money into rare earths, and in a sense they're just picking winners. They're picking certain companies rather than going at an infrastructure approach or other sort of approaches that they could potentially take. Do you have thoughts on that?
Even give like a tax break to equity investment, for example, if you wanted not to pick winners, but seem to pick winners.
There's a host of creative solutions that they could pursue, but they've picked a method and they've done it a few times now with various projects in the forms of cheap money or just outright grants. And I'm not sure if this is a subject you've dived into too deeply, but do you have any sort of, anecdotes from history where you can compare this to, or thoughts on the point?
Well, I think the whole sort of government influence thing is kind of an interesting question in general, right? So you've talked about tax grants and things. It can do kind of things two ways, right? It can kind of like subsidize what it wants, or it can sort of eliminate what it doesn't want. So where I've seen this discussed quite a lot is in around sort of fossil fuels and stuff, right? So there's kind of two ways to dealing with the energy transition, and the governments will probably end up doing both. But you can either sort of discourage people from mining and using fossil fuels, regulation, a carbon tax, or whatever it is that you want to do, right? There's a sort of discouraging thing, and that will then create space for the new guys, or you can directly subsidize the new guys and, with sort of government grants and tax breaks and, even just sort of help and advice and fast permitting and all this kind of stuff, right? And you'll end up doing both. I think the main thing you always have to learn about sort of this government stuff, there's two things I would always... One is there are always consequences to these ideas. So any given idea, it'll have an aim, but it'll also do a bunch of other stuff. So you mentioned like a tax break for private equity investments. That seems sort of reasonable because then they're choosing. But to me, it's only worth doing if that tax break encourages them to invest in something different. If all you're doing is basically giving them a discount on what they would already do, you haven't actually changed anything. You've just given a tax break to private equity. But if it's a case where we are seeing said portfolio of things are, they're a bit too marginal, a bit too risky, but you as a government think, well, actually, I'd kind of like people to look at these. So if you subsidize the private equity investment and then they go do that, that to me seems a legit kind of reason to do it. You're kind of changing the behavior of something in the way that you want. It's a bit like how the drilling, co-funded drilling works. The idea of that is that by giving that bit of extra funding and reassurance to the companies is that they try something more ambitious. They try something a little bit different, rather than one of the opposite problems we had a little bit in Canada where they do the flow-through shares is, and from memory, it's the investment, it also has to be above a certain line in the country that is sort of defined as regional or what, kind of rural kind of thing. So it's like, it has this kind of economic development type thing. But what essentially happens is it just encourages loads of people to essentially drill slightly above the line. And you get, even if your deposit was to go across it, right? Like you get free money for doing what you were going to do before. It's not actually really changing behavior that much. And in a weird sense, it might have changed it too much the other way, in that there becomes an over incentive to sort of
gamify the system.
Well, yeah, and just drill anything in Canada rather than, and use it for, tax benefits for your investors, rather than actually trying to find something, right?
But they
Because-
just raise it a higher price to be less dilutionary because they know they've got the flow through discount. So I don't know.
It all nets out.
I was saying it's more that just the sort of
Yeah.
there's always this concept.
Unintended consequences
Yeah, and
of
so it's always worth thinking about those.
systems.
But so you're kind of damned if you do and you're damned if you don't to a certain extent. But I think we're starting to see, like, I'm sure it'll all be proved wrong in the future, and everybody will play the podcast back to me. But things like the Eneabba deposit, I thought was kind of what they're doing there is kind of interesting from a government investment point of view.
If they can ever, yeah, I mean, there's a big funding gap there. We'll wait and see what happens.
The actual idea of taking what was a private sector, kind of idea, we're going to mine these tailings, and saying, well, actually, if you make a bigger plant, we'll fund you on that, and then we can bring in, these other, custom rare earth sort of supply from around the state. I think that's heading in the right direction as an idea. If you know what I mean, it's kind of like an infrastructure investment. Whether it all works, nobody can ever guarantee these things, but I think it's sort of heading in the right idea. It seems, got to try something right, and that seems something worth trying.
Do you reckon NAIF looked below number 1 on the critical minerals list in Australia to see where the funding should go?
No, they've given a few things a crack.
But rare earths at number 1 got a good chunk of it.
NAIF in rare earths? You mean
NAIF, well, like Arafura and Eneabba.
Eneabba is not NAIF. Eneabba is it's the Critical Minerals Fund. So it's a bit
Which one was bloody Arafura? Was that NAIF?
Arafura's got a bit of EFA. It's got a bit of NAIF, a bit of might even have CEFC in there as well. But it's all, yeah.
Yeah, Eneabba, I think it's like it's an arm of like the Government Development Bank or something like that.
Yeah, there's a lot of export finance.
Yeah, export finance,
concessions in there. But
yeah.
NAIF's in there as well, I believe, too. Yeah. But yeah, NAIF have lost a lot of money on other commodities too, don't worry, mate.
What else they lost? Which ones?
Potash?
SOP. So, Callium was them. Let's see how Sheffield goes. That's, having some hiccups, but it might turn out okay.
So there's also an interesting thing about governments losing money.
Yeah.
Which is partly that that's what they're supposed to do. Right, in a weird way, that if it's a viable investment that would be done by the private sector, i.e. it's going to make money. Let the private sector do it, right? Where the government steps in is where, things aren't working, and it maybe there isn't enough infrastructure in a place or whatever it is. They have to step in. So in a weird way, they kind of their job is to lose the money. If you know what I mean.
We have to find something. What's the shittest thing?
The infrastructure point is
valid, completely valid. If you're building like highways and roads that open up economic prosperity that's long-term sustainable, completely understand that. If it is to subsidise a project that is long-term unsustainable, I don't think that helps anyone other than your multiplier effect from digging a hole in the ground.
Absolutely. And the multiplier effect of mining is proven with multiple studies to be very minor. Yeah. Right? It's a capital-intensive industry. It's not a labour-intensive industry, unless you get into sort of artisanal mining in Africa.
Yeah,
it's not what we're doing, right?
Totally.
You don't build mines to provide jobs. Kind of,
Well, you look at BHP for Nickel West. Like if the government stepped in and subsidised, it would have kept people their jobs. But a lot of them are getting redundancies anyway, so it just would have saved BHP money.
Yeah,
not the people, because they're getting the money anyway.
Yeah,
yeah.
Maybe pivoting to questioning why do we have this outlook on certain things in commodities and perceptions like. Gold is such a fascinating commodity. I mean, it's kind of crazy to think at one point it was like the majority of Australia's export dollars was exporting gold, not iron ore. It wasn't all that long ago either. But kind of crazy. And we spend so much of our exploration money looking for gold, looking for more gold, and arguably that could be better spent.
Yeah, I think
so easy, but
I think Alan made that exact point. I think I know where you're heading here. And every time we write about gold, people shout. It's the thing that makes people really angry, which is good because it means people have read your stuff. But I think 50% of minerals exploration goes into gold exploration. And he was just making the point that if the various critical minerals, whichever people are classifying it, are so important, why are we spending more on those kind of thing? Now there's a little bit of Alan's always sort of teasing everyone, but there's a little bit of game in this that you're right. The value there's a lot of value in gold exploration. Like if you find a gold deposit, your share price goes like this. So you get the value very quickly, whereas the value of exploring things like lithium and rare earths and whatever, a lot of these things that I've called concave metals comes much later down the value chain. So that's why you kind of get less exploration for it, because it's once you've found something, it's more about trying to make it work. Whereas a lot of the gold industry, the value is generated by finding more and more stuff to throw through a mill kind of thing. So it's a different game. So that's why you get more exploration, if you know what I mean. It's also, as you said, it's kind of easy stuff, right? It's frontier stuff, right? So, gold is mined, as far as I understand it, in pretty much every country in the world, right? Because it's easy and high value, right? And you can fly it out on a plane if need be and all this kind of stuff.
And very understood.
Yeah, you can say it's got perfect market at the end, right? So you can always sell it, which is why a lot of people buy gold anyway, or at least in their head feel that gives them the confidence that I've got some gold coins or gold bars or whatever. If shit hits the fan, I can always sell them. I mean, I've never really worked out the mechanics of how that would work in like the zombie apocalypse, but whatever. People are happy with that. That's fine.
Probably couldn't fucking sell anything anyway.
Well, this is the thing. Yeah, yeah. I mean, I do a lot of scenarios work, and people always talk. What about this scenario and that scenario? It's like, no, this is end of the world stuff. You don't need scenarios for end of the world.
Cash should be no good either.
Yeah, I mean, if it really is the end of the world, you're not going to be at work planning. It's like if a meteorite's coming, people aren't going to go into work at BHP and sort of like, oh, well, we should really look at what the meteorite means for our future iron ore production. It's like, no, they're going to be at home with their kids crying.
Yeah.
So you don't need a scenario.
You just
for that.
need tins of tuna.
Yeah, exactly. Shotgun or whatever, right? So, not me. I'm shooting myself, but it's gold. I think it is kind of fascinating. I know that the paper you're talking about as well, where we get a bit of heat, it's the digital gold thing as well, right? So once, and it was probably Alan who actually wrote something along the lines of, gold, doesn't do anything, so it's not needed, and then everyone gets angry. I think he was quite making that point. But we have this whole thing where its job is to provide value, right? That's kind of what it is, right? So it's that Warren Buffett thing. We dig it up, a great expense. Put it in a safe and underground again, and have it guarded, right? And what's the point of all that?
What is the point of all that, Trav?
Like if you want to go deep and meaningful, I think there's some kind of fabric of society that is allowed by knowing we've got this kind of backup money that's got historical, precedence of, letting society function. Yeah, but do we need that today? Don't know. I do find it an interesting question to pose, though, right? Because we love to talk about critical minerals and what makes a critical mineral. Oh, so look at these sexy things that they're critical. We need them. Why they're critical? Oh, okay. No one gives you a good answer there. But then no one wants to let certain minerals be critical, like met coal, which good luck not using it. You need it.
It's like tin.
And what makes something? I just think what makes something critical. The fact that there is like a market clearing price tells you someone is buying it because they need it. They need it. You buy it because you need it.
And when it's not substitutable.
Totally. Totally. Not substitutable. Like you can't use anything else for it. Like, and you're willing to pay a certain price for it. You're buying it because you've got a purpose that you absolutely need it for. There isn't like a reasonable alternative with the resource constraints that we have to use anything otherwise. And you can, I just find the whole concept of defining these kind of critical minerals, it irritates me, it irks me, because it's kind of like, I just think, the market defines what's critical and what's not with a price. And sure, if we want to put tariffs or taxes or whatever on the market because we think there's the market inefficiencies, that makes sense. But
it's all stories, right?
Yeah.
So this is back to the scenarios type stuff. And it's what you guys do, right? It's stories. That's how we talk. It's how you communicate. You asked me earlier, give us an anecdote, give us a story, because that's how we understand these things, right? So every one of these sort of critical minerals miners, right? The way people get into them is because they like the story of sort of the energy transition, or new metals, or getting in. It's a different play on Tesla or whatever it is. It's usually the demand side story, and then slowly like a supply side story builds up as well. It's like there's not enough of them, or they're controlled by China or whatever it is, right? So all of these, it's just stories and that's actually what draws people in. I'm not saying that numbers aren't important. Like clearly, at some point, the maths has to add up in sort of vague kind of ways. But it's definitely the stories are sort of what brings people in the first place. I think gold is kind of an interesting example in that sense. Is that gold is one of these things that it seems to have many different uses. It's sort of part currency, part sort of safe haven, part sort of reassurance, part proper sort of financial asset, part physical asset. There's lots of different complexities. So as much as we're sort of like joking about digging it up and putting it back in the ground, it clearly does also have a function. Just because it doesn't go into a car or a set of headphones or whatever, it can go into very nice headphones actually. It doesn't mean that it doesn't have a purpose. So I think that's to be understood as well, and understanding the stories behind why people buy gold, I think tells us quite a lot about what is sort of valued and what is sort of needed. The work that in that paper actually with a academic at UWA called Dirk Bauer, who's like a specialist in analyzing financial markets, a lot of like Bitcoin and things like that as well. And it's like, how, getting your head around like, why does Bitcoin exist? Like, why do we need a sort of like a digital cryptocurrency that kind of doesn't really exist and all this kind of stuff? Like, going back to what you say is, well, clearly there is a need for it because it wouldn't exist and wouldn't be a huge market either. So there's a sort of kind of accepting that side of things. And I think this is a little bit where we've sort of gone with the digital gold kind of thing, which is that if you sort of, which again was a bit of a sort of, it seems like a silly idea at first, but there's a sort of a certain logic to it after a while. And I can see you smiling.
I'm trying to get Trav going about it. It's, you'll love it when he reads about it.
if people are concerned about the environmental side of it, and you can essentially simulate the value generating side of it without taking it out of the ground, that would be, that might be an asset class that people are interested in, right? So to me, it seems very worth looking at, right? Maybe it does have more role. I think, its role in the energy transition, I think, is quite interesting in general because it's much more to do with the financialization of a lot of these things, right? So that, the thing that actually helps us get stuff done in the mining sector is financialization of something or other, right? It's, the various commodity markets, the various different ways of funding and financing things. I know you're into your different types of insurance and stuff as well, right?
Oh, mate.
Like all these different things, right?
Oh,
that
there's only one type of insurance I'm into.
There's only one company.
There's only one company.
Who's that, Matty?
CRE.
Oh, okay.
Did you know it? Do you know any other ones?
No, I'll let you be the insurance specialist.
No, it's just CRE insurance. That's all you need to know. You're going down the road.
I get paid for that, right? Yeah.
Steve, Adam, and Dave. Hey?
Yeah. But yeah, all of this stuff helps you. As it helps this stuff happen, right? It helps these things get financed and up and going. And so gold has a role in that area as well. These digital assets also have a role in this. So we could have a long talk about gold, and I always find how like the rise of the ETFs and stuff like this to be kind of interesting. It's like where the miners got beat at what they should be doing. Like, why invest in this mining company? It's exposed to gold. Well, actually, you could just have an ETF product that does that, and get rid of all the risk of the mining bit of it.
Then
and
that
the
just
countries.
become a big product fest.
Yeah.
ETFs. We'll just make a new one. And they're just, who's got the best one? Who's going to get the most and make the most fees off it?
And then you have the ones that are backed by gold or not, which I always find kind of interesting. It's like,
the gold price ETFs or whatever, they've outperformed like 99% of the miners. And the other asset class that outperformed really well with the royalty companies of gold royalty companies. They sort of captured you had this trend over decades of gold miners at one point trading at 3 times NAV, and now it's like, okay, at most they should probably trade about like 1.1 times NAV, And what happened? Royalty companies came out and they trade up to 2 times NAV now. They captured sort of the upside.
Another interesting like financialization, right? Like turning making money out of mining without moving any rock, right? It's full credit to Lassonde and all these people who came up with these models, good idea. But it also does help finance the industry too, right? There's plenty of companies that use it to, fund the development of those projects. So I think that space, it's not like my great area of expertise, but what I do appreciate about it is that it has a really, really important role. And I think sometimes that's a little bit overlooked. But
I'm curious, John, like, your the decades you've spent kind of, in the research domain of things, and like where do you think there are areas of big disconnect between academia and practice from a financial lens?
I think in a weird way, the one we come across, it's not so much like a subject kind of thing. It's more about appreciating that the different sides of these things have different incentives. And like people don't appreciate other people's incentives. It's a bit like that. What's that phrase? Like other countries have politics too, kind of thing. Like, other people have politics too, which is so like, a lot of academia is sort of, I'm on the very fringes. I'm not like a proper academic, but the full-time people doing it, trying to make a living and whatever, it's all driven by publications, and these publications then help them get government funding and grants and things. And then with these government funding and grants, and you get like the longer term security of a post or a position. And right, so it's, the paper metrics and the publishing and stuff is really, really important to them. It's kind of like how they're judged, in the same way that like a CEO is judged by the share price. Whether he should be judged by the share price is a good question, in the same way that should an academic be judged by the number of their publications kind of thing. Are these too simpler metrics for doing it? But that does lead to sort of diverging kind of, not only is it diverging incentives, but totally different sort of ways of structuring things. So if you do anything with a university, if you're in partnership with them, what you get from them is everything in kind. You never get money. Even when it's money, it's not money. It's just, they'll say they'll put money in and give you that money in kind via, providing researchers and facilities and infrastructure and stuff like that. And it takes quite a long time to sort of, for anyone who wants to do stuff with universities, to work out how that works. And that it creates quite a high barrier to entry. So then you get people on the industry side who sort of almost specialize in doing that. And I think this can then get quite frustrating, because you've got sort of groups of people, and it's always the same people kind of doing these things to sort of, and it's just like, well, what's the purpose? Why are they doing that? Why aren't they doing this? And I think that's the bit that's misunderstood, that it's actually kind of, it's quite a complex thing. And being able to just go to a university and say, like, we have some money and we'd like you to do this. That's not kind of how it works. That's what a consultant is, right? And I think that's sort of not appreciated. And I think, don't get me wrong, I think on the university and academia side of things, I think there's plenty of naivety there as well, right? So in general, people are super specialists, which means that they know a hell of a lot about a little thing. And that can be a really important little thing, but it can means they also know don't know a hell of a lot about a lot of things, and you do get some naivety on that. Like,
are we very good at like pushing the frontier of the important kind of concepts in mining at within university domain? Like, are we good at kind of pushing the edge of exploration possibilities and getting better at that over time? Are we good at kind of understanding the pitfalls of why do we always get the same things wrong in mining investment? Those sorts of topics.
Well, I think that's a fair point. Like, I always feel that like the field of mineral economics is very like underappreciated in sort of academic economics. There are no famous top-ranking Nobel Prize-winning mineral economists kind of thing, which bearing in mind how important sort of minerals are, and also for like a lot of them were used for like things like resource rent and stuff like that, like the basic sort of concepts, Adam Smith, Ricardo type economics was done on things like minerals and mines and stuff like that, right? I think it is a little bit of an ignored field. I think it's seen as a little bit too applied and stuff like that. So I think there are sort of gaps in that, which are sort of various people are slowly trying to fill over time. I think there's not a lot. I think often commodities and minerals are seen as a bit simple. So even like I work more in the strategy and management kind of area, and people sort of tend to think, it's a commodity. You can't do anything about the revenues. It's just about doing some stuff at low cost. And then, they sort of end the conversation there. And as we've been talking about, there is a hell of a lot of nuance in all that. Firstly, most of these things aren't commodities, right? And even if they are, there's many different ways of like changing the price and getting things and setting up deals. There's a whole just so much stuff in there, and I think that's kind of a little bit underappreciated as well. I think in a weird way, the industries as a whole is kind of oversimplified. Even the politics of the industry, I think, is oversimplified. That sort of, miners are these like red in tooth and claw capitalists who will sort of burn and rape the planet to get as much possible money as they can. There's like a T-shirt my university used to have. I can't remember which episode it was where you were talking about, places that are really beautiful. It's quite hard to mine there. It's like, yeah, that is definitely true. But the T-shirt was like, oh, look at this beautiful, tranquil scene. Let's mine it. So I think that sometimes is kind of the perception. But it's not, right? The mining industry is a huge amount of people with a huge amount of varied beliefs that all be across the political spectrum, across the different types of people that there are around the world. So as an industry itself, it's totally nuanced and messed up and lots of different incentives and people trying to do different things and believing in different things and stuff like that. So I think it's probably a slight oversimplification. I think where Australia has a little bit of an advantage is that it has an industry that matters. So most people know someone, even out east, dangerous out east, people know people who work in the mining industry, whereas in particularly Europe, that doesn't exist anymore. So that sort of end-to-end point, kind of people that have the connection, and it's always easier to demonize people who you don't know, right? Yeah. Whereas if you're demonizing someone you do know, it's people tend not to do that, or at least do it sort of a little bit more subtly or behind the back or whatever. Whereas I think obviously where I grew up in the UK, you don't have that. Nobody goes into geology to work in mining anymore. Like that's not a conceptual connection. But interestingly, I think sometimes that actually works to the advantage. So I was at one of these academic-y industry research collaboration type talks, and we were looking at a series of PhD students who are all mature PhD students and their journey into geology. And it was so people from the academic side and people from the industry side holding these kind of innovation type roles. And they're all talking about, how did you get into geology? Not one of them got into geology for making money. All of them were a bit like myself. I liked doing stuff outdoors. So, I liked going on field trips, basically. That's why I got into geology. Free holiday as part of school. I'm up for that, right? And that's kind of like why most people get into geology for like dinosaurs and colouring in and diamonds and it's like this. It's a fun and interesting subject, and I think that actually has a higher uptake rate of getting people into the subject than sort of saying, "Hey, you can make money at the end of this." That's an argument for doing an accountancy qualification.
So many geologists. Well, we're here in Perth, right? But so many geologists go to uni and they learn all of this sort of stuff, and they end up kind of working for BHP or Rio Tinto doing iron ore geology, which is like not the best kind of use of their diversified skill sets that they've got. They're not flexing all the parts of what they learned in uni, and it's as far as geology goes, maybe a bit more boring.
Yeah, no,
but they get paid the most.
Yeah, no, and look, we all have life choices, right? But yeah, no, behind every one of those, you know these people, you are these people. You go look around here, you go to any geologist's house, there's always rocks and dinosaurs and maps and books about exploring and finding things and adventuring. Like, it's a subject of, inherently it's that kind of subject, right? So I think sometimes that's missed. Like, in a weird way, promoting the sort of that you can go work in the mining industry might backfire up to a certain point, because it's actually more about kind of promoting how cool this subject is and how much fun it is. It's how you get people into exploration. You don't need to get people into exploration. People like exploring. They get themselves into exploration. It's almost like, how do you stop them leaving, if you know what I mean. Totally. So yeah, I think that's, again, on the academia side of things. I think, funny enough, that's why it makes things like mining engineering degrees so hard to pitch. Right? Because it's so specific, right? You're writing down, right, we're going to go into mining with this, and engineering is hard, right? It's lots of maths, lots of hard work, and maybe doing something more general or something, more obviously related to high-tech sectors kind of is the better decision. And I think that's kind of where they're struggling. It's that they're having to pitch going into mining is the advantage. Whereas if you pitch engineering, like a lot of these STEM programs do, is sort of like you can sort of go build things that go to the moon and Mars, or you can save the planet with like cool new energy transition technologies or whatever, like that's a better pitch, I think.
And what about behavioural biases in the industry? Like, what do you think are the worst behavioural biases that kind of inundate our industry, be it in the boardroom or in the decision making rooms of mining companies, or even in the mindset of investors?
So I was watching something the other day with Adam Grant, who's like a psychologist, organizational psychologist type thing, and he was talking about, I can't remember what he calls it, but it's the bias of thinking everyone else has biases, which I thought was which I thought was quite a good thing. So to me, I think the bias that we probably have. Look, I'm not a sort of organizational psychologist, but the thing that I always think we do everything a little bit too late and a little bit too fudged. So there is some studies that show, like, for example, during like an organizational growth, you need like a relatively homogenous group early on, because you need basically a cult of people who think that this is a good idea to go do this thing that nobody else is doing, because we know what we're doing and everybody else is wrong. There is no other startup mentality, if you know what I mean. You need that kind of thing. But pretty quickly, once you get going, you then need to broaden things out so that you don't screw everything up and don't, become like, what was the Trav at Uber?
Trav Keller.
Yeah,
Keller.
and don't, get completely out of control and have to have like a nice female CEO come in and be nice to everyone just because you're a total kind of, psycho.
Megalomaniac.
Audit, yeah. So you usually need to diversify much quicker than you sort of think. And then similarly, when things start going wrong, there's been some sort of research that says, like, actually, again, you need to go homogenous again, because you need that focus kind of thing. It's not so much the thing about the diversity that I kind of care about that. It's about the timing of these things, is that usually by the time you're thinking I should do this, you should already have done it, I suspect, is probably the bias. I always think when I do the scenarios work, I always talk to people like, I don't know exactly, it's like a meme as well on Facebook, these ones where like, I think, 1990, I think is like 20 years ago, and it's not, it's like 34, 35 years ago kind of thing. And like 2000, yeah, that was like a couple of years ago, this kind of stuff. And like, 2020, yeah, that's now, isn't it? And 2024, that's in the future. It's like, no, that's now. I think we live in like 5 or 10 years in the past kind of thing. And we see that as our present, and it means we're almost always catching up with our present, if you know what I mean. So I think we tend to do things a little bit slower and less bold than we probably should. I appreciate doing bold things is risky, and that's not something everyone can do. But that to me is the bias: is that we often don't do what we know we should do quick enough.
That ties in well with your sort of point on storytelling. It's just so important in human society. It's so important in capital markets. People that can tell good stories have a cheaper cost of capital. They can create cult-like, organizations, like your point on Uber there, and it's it ties into why 1% of the people earn the vast majority of returns out there. Why there's a sort of power law to those things.
Yeah,
so many good stories out there.
So many.
Isn't there?
So
well,
many.
no, you're completely right. And like if we were at the pub afterwards, we wouldn't sit around sort of telling each other facts, right? We'd tell each other stories.
Put a bit of mayo on it.
Yeah, and we'd have something to eat and some beers, and yeah. But you don't sort of go out and say, have you looked at the sort of the MPV calculation of? It's like it's not how you make friends. Well, it is in some very narrow circles, but generally you just exchanging stories with each other. So that it is how we understand the world. I think it's Mark Twain, or it might be Oscar Wilde. It's usually one of them. A mine is just a hole with a liar stood at the top.
Gold mine is
Mark Twain.
Is it Twain?
Yeah.
I thought it might be Oscar Wilde. He has a bit of a history of the mining industry. So, there is of a certain truth to that. you almost need like an honest liar if such a thing exists. But you have to have the story and the facts kind of thing. Like, I think there is truth in that. And I think, again, it's an underappreciated art form. I think sometimes we more on the technical side of the world can be a bit snobby about being able to communicate and talk well, and almost take pride in not being able to do that, which sounds like, when you think about it, is actually really stupid. But I think there is something a bit like that.
I put this this article in our newsletter that we send out about cobalt metals, and they've got backing from Bill Gates and Jeff Bezos and everything, and they're using AI to find new mineral projects. And it was a write-up in the Wall Street Journal, and in the Wall Street Journal there's a comment section, and there was a lot of comments chucking up that exact quote from Mark Twain, from maybe people that have been burnt punting on resource stocks or anything, but putting this futuristic blend, this tech blend you kind of talk about that attracts people to the mining world, telling the story, and maybe there is a bit of value. I mean, they've got Bill Gates on board, they've got Jeff Bezos on board, they've got all these the who's who of investors.
So there was
Twiggy's in that too.
Yeah, is he? Yeah, there you go.
So there was a really interesting thing said by Daniel Kahneman about stories. So he's organizational psychologist and biases and that. And he says, like, the cost of the way we communicate, they can be used for good and for bad. So you need to be really good at understanding stories. You need to be able to tell stories, and you need to be able to understand stories. And like, this is a really like vital human survival thing. And that, I think the example he gives is that it's like the ancient Greek messenger god, like Hermes, is also like the god of like poets and theater and that kind of, the art of telling the story, but is also, on like the flip side, the god of like liars, cheats, criminals, and stuff like this, right? So, it's a two-faced thing, right? So a story is just a story. It can be a story for good or a story for bad, and that's kind of what you've got to know. It's the same with numbers, right?
You mentioned Kahneman there. I think of Munger. Like, he had just such a phenomenal understanding of our psychological biases, and you listen to any conversation he's ever been in, and he answers things with a story. It's it's rarely this like kind of factual thing. You'll tell this story of this thing, and then how that illustrates this point.
Or even just the way people describe the classical way of describing how a market works by economists is like a story. When you go to the fair and you have the big thing of sweets, and you have to guess the number of sweets, and then the person with the right guess wins the big jar of sweets, right? Nobody ever counts the sweets. All they do is just take an average, and the person who gets nearest to the average is the winner, because nobody's going to bother counting the sweets. So that's kind of how a market works, right? Is that we never actually count the sweets. It's sort of agreed that this is what it's worth at that time kind of thing. So what you're actually trying to work out is, what does everybody else think this is worth? It's not what you think it's worth, it's what everybody else thinks. And so there's a sort of, weird psychology even to that, right?
Value is perception, and you're trying to figure out the areas where you have a non-consensus view, but the herd will converge to your view, and that's where you can make money.
Yeah, I can't remember what it is. Is it value is what you want, price is what you get, or something like that?
Yeah.
Beautiful. This is it's been a fascinating chat, John. I think we've taken more than enough of your time, but thanks for coming in and chatting about everything under the sun with us.
Yeah, no worries. It was good fun, and thanks.
Do I get
for
a
having me.
fucking degree or something after this? Like, it's like being at a good academic lecture. It's high level. We'll get signed off or
smarter
anything.
for it.
I think all you need to do is 12 3-hour sessions, and then you get a module, right?
Yeah, right.
Charge money for
There's the first one done.
I'm just so curious too. Like, is there anything that you reckon you'd want to leave our audiences with as well that we haven't kind of thought about today?
Oh, the one thing we were talking about before is we're all book people, so
Why
we do that, right? So it's on my LinkedIn page. We've done it in mining news, like the top 10 mining reads, and you have a few around. You've got World for Sale. Yeah. Dependent on one's interest. I think the one I always put at the top is like Hard Road West, which is this like the geology and sort of history of like the 49ers, like going across like the US. So it's like a guy who drives it. Like, so it gives you like what it looks like now, all the scenery, but explains the geology and sort of all the history of it, which I kind of like a book like that. There's stuff like Jules, which is quite cool, which is like all of the different things like opal and amber and then the more valuable diamonds and rubies. That's kind of an interesting piece. It's like a journalist thing where they sort of travel around the world, go to all these weird like amber mines and jet, which is from my home county of Yorkshire, which is like a black mineral from sort of coal type stuff. And it's all about these, but it's also a kind of a lesson for like the last one you get to is diamonds, and it's the last one to be substituted for something artificial. Like the artificial diamonds is now either even going into like the jewelry side of things, and we always thought that they'll only be good for industrial, but like if you look back through the history of all of these things, as you go, the more and more valuable ones, they've all been substituted for an artificial one at some point. And so that's kind of an interesting one. So we'll have a look at the reading list, and maybe we can do a whole thing on books at some point. But,
Love it.
Yeah.
Awesome.
Thank you so much, John.
Thanks,
Cheers,
John.
Cobber.
Cheers.
Yeah.
Can you intro us to your Uncle Trevor?
Once I get that email saying,
Are you related to a Chris Sykes?
No, not that I'm aware of.
You don't know any Sykes I know.
As far as I'm aware, I am the only person in my family working in mining. But
There we go.
Righto, there we go. In the weeds, boys.
Jeez, we covered a lot there, hey?
Covered a bloody. It's got deep at the end. It got real deep and philosophical. Good tin and rare earth stuff. I learned a shitload off that. Bloody loved it. Right. We're
who else we
technically out diggers at the moment. This was a little pre-jobby.
We've got a couple people to thank.
And
for
hopefully
that.
we're having beers with them right now. Axis Mining Technology, Mineral Mining Services, VRIFY, SMEC.
CRE Insurance.
Yes, JD. DSI Underground. Silverstone. Greenland's Equipment.
K-Drill.
K-Drill. We're definitely having a beer with old Drew Harvey right now. He loves a pint.
Go Spark.
Go Spark. Hoodaroo,
Hoodaroo.
buddy.
Go Australia.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.